Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1080th edition of Short-Term Trading Live with Oscar Carboni, and that would be me. Good evening, traders. This video is being filmed on Tuesday night for trading Wednesday, September 25th, 2013. Remember that futures trading is extremely risky and can certainly cause substantial financial loss. It is not suitable for all trading accounts. All right, traders, so my 1080th video teaching you the art of technical analysis, and here we go. Gold bugs, pull up a chair and pay attention, because I think some of you are going to like what you see. Others who are perma bulls, I don't know what to tell you. Traders, the gold on a daily. Multiple head and shoulders forming the first one I pointed out to you, OMNI, and we broke down. Then we broke down through the channel after coming out of this head and shoulder formation. Left shoulder, head, right shoulder. So an upright head and shoulders in a bear market is bearish. So you did get the down move, right? Well, here we are. What are we going to do for Wednesday, September 25th? If you ask me, you have 1, 2, 3. You have the exact same thing happening now. You've got a head and shoulders building right here. You're below this channel. The Omni is absolutely bearish for trading on Wednesday, the gold market. So I would say, looking at the daily chart, gold looks lower. Let's look at the weekly. For trading on Wednesday, September 25th, the gold looks weak on the weekly chart as well. Let's add in our wonderful 200 bar moving average. You know, the whole world watches that average. Traders, I've shown this chart to you in other videos. Let me tell you one thing about this chart. The gold market, when it's in a bull market, does not violate the 200 bar moving average. A bullish market does not violate the 200 bar moving average. Now, this is gold weekly, traders. It's the gold weekly bar. Each one of these green bars represents 1 week's worth of trading. Let's look back at the 200 bar moving average. This is a bull market since 2006 when it started. You have not touched the 200 bar moving average. Not at all. Gold bugs, pay attention. Here we are. The crisis seems to be over. The Fed's even considering raising rates, and we break the 200 bar moving average. That, my friends, is proving we are now in a bear market in gold. So look at this channel. We're in this channel right now, heading lower. We are below the 200 bar moving average. We have had our distribution area, and we sure did distribute, because look at what's happening to the price of gold. Then if we blow it up just a little bit and we take a look at what's going on here, we recognize that you're building a head and shoulders again in gold on the weekly, and that should be quite meaningful, traders. It should knock us down probably after the fiscal cliff nonsense, but this looks bearish for trading right off the bat on Wednesday, September 25th, let alone the fiscal crisis at the end of the week, end of the month. But this looks bearish, traders. It's been coming down for months on end. Again, in a bullish market, the 200 bar moving average does not get violated. It did here. I think that is bearish. Let's switch around to another chart. Traders, this is your silver chart. The silver market, a head and shoulders, a bearish head and shoulders on the daily bar. But before we go forward, let me show you a little more about this daily bar. A lot of traders are calling this a bull market. This is silver. Follow the pretty little red lines. That is not a bull market in anyone's imagination. It is not a bull market. Now, there is a case that traders are making for this to be an inverted head and shoulders. Maybe, I don't know. I would think that the metals tend to be very bearish at these levels and not bullish, but this is a case. I've had many traders send in charts asking me, Oscar, is this an inverted head and shoulders? And I won't say no, because hey, I don't control markets. We are possibly in an inverted head and shoulders, but right now this right shoulder here has multiple head and shoulders inside of it. That tells me that that alone is bearish. Let me see if I can point out another one sitting right here. You've got this one right here. That is bearish. The market breaks down. Now we've got another one right here. And maybe you're in a right shoulder, maybe you're not. Let's not call it that unless it fully develops. Let's call this what it is, two small head and shoulders, and we have been in a bearish market. So for the day trade on silver, that looks bearish. Let's look at the weekly. Traders, silver on the weekly chart. Bear flag, drop. 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 Look at all the pretty bear flags on the silver weekly. Now we've got this. Left shoulder formed. Head formed. Ready to drop into the right shoulder. I contend that we drop in silver and then we spend a few weeks like this, getting herky-jerky inside of this shoulder a little bit. And then we have our break even lower, because if the Fed's looking to raise interest rates, there is no need to be in metals. And guess what happens when you are in metals and they raise interest rates? You've got carrying charges. You've got to pay fees to hold on to your metals. Those fees get more expensive as the carrying charges move forward. So I would think if they raise interest rates, metals get clobbered. So this is what I expect to happen. We build the right shoulder of a head and shoulders formation. Here you would have your left shoulder, of course. And then here you've got the head. And then the right shoulder is what we expect to be forming. And that, my friends, would be quite a bearish formation to happen where it's happening. So left shoulder, head, right shoulder. The whole thing equates to head and shoulders if this, in fact, fills in. So for now, I say we are bearish in silver. We are bearish in gold. We are sellers of rallies. And I hope this helps to keep you in tune with where the metals are going. Now, the indices is a little bit tricky. If you come to livewithoscar.com, I will tell you what I think about the indices live right in my free chat room. Traders, by the way, I actually have a chat room. It is free and it is live at livewithoscar.com. Come to my free chat room and allow me to help you become better analysts. Now, sorry I did not get in front of you and give you one of those videos where I'm in front of the camera, jumping up and down and going nuts, but I thought this would be a little bit better for you because it shows you the charts right here. And I have been preparing for OMNI Camp, which will take place at the end of this week. Traders who are coming to OMNI Camp, welcome, welcome, welcome to Vegas. We expect you. We can't wait for you. And we hope to change your lives as far as analysis goes. Traders, you come on down to livewithoscar.com in the interim, and I'll be glad to help you become better analysts. Always remember, keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Traders, rock and roll. Thank you, and I'll see you at livewithoscar.com.